In our today's video, we are guided by this schedule and we will be looking at different options that are available to a bond issuer, whether the government or a corporate institution or a company when it comes to debt management. We'll be looking at a bond switch, a bond buyback, bond calling, redemption, and rediscount. November 2025 bond auction includes a bond buyback, and this is not the first time we are getting a bond buyback auction in 2025. In 2024, we had a bond switch, and early 2025, around February, we had a bond buyback. What is a bond? And the simplest way to define a bond today, because there has been a lot of technological changes in the bond markets, we will call it an electronic paper or document which acknowledges the existence of a legal debt. And therefore, effectively, a bond becomes a debt instrument. It is an instrument that will be used by issuers or borrowers of capital when sourcing for debt equity in the market, whether the local or global markets. We have several types of bonds, but that is not what we are looking at in this video. And therefore, issuance of bonds will create a buildup of a loan book or a debt book with the issuer, who will either be the government or a company, a corporate institution. Those bonds that are issued by the government are the ones we refer to as treasury bonds. And in this case, we are looking at the generality of the two types of bonds because a bill is just a short-term bond. On the side of companies, what they issue to borrow from the market, those are corporate bonds. Their short version is what we call commercial papers. That loan book or the debt book that builds through the borrowing has to be managed for obvious reasons, including managing the amounts or managing the redemptions or maturities for the papers issued. And therefore, the options that are available in the management of the debt book is what we are looking at today in this video. The first one we are going to define or look at is a bond switch. And switching simply is moving an investment or a debt from one bond to another bond. So switching, you are transferring your holding in one bond to another bond. And the reason why a switch becomes important or an available option in a bond debt management is that when it is perceived by the bond issuer that on a future date, there will be a huge sum that will be maturing or a huge number of papers maturing on that particular time, in order to avert default, in order to ensure that this issuer doesn't default or face difficulties raising enough capital to pay back those borrowed amounts, then one of the options available is to issue a bond switch. And a bond switch auction is an issue of a new bond to a category of existing bond holders who voluntarily purchase or bid for the new issued bond for purposes of the switching, transferring their holding in a near maturing instrument to a longer term maturing paper. And their purpose is to move some of the maturing papers in that targeted future date to further dates in order to reduce the maturities for that particular period. What we'll call like staggering maturities of existing bonds. The next option in managing debt is what we are calling a bond buyback. And this is what we have currently in our November 2025 bond auction. We have a buyback option. We have a buyback auction. And in the case of a buyback, there is no new bond to switch to. There is no issuance of a new bond, but it is an auction given to existing bond holders to voluntarily consider a redemption or a maturity of a near maturing instrument. For example, in our November 2025 buyback auction, we have the Fxd1 2023-3, which is supposed to be maturing on 11th May of 2026, about 7 months from today. And therefore, this buyback auction is issued only to existing holders of bonds of the Fxd1 2023-3 who would want to consider a redemption or an early maturity of that paper. They bid for a portion of what they are holding or the entire amount that they are holding to be paid back. Therefore, for the government, it amounts to an early redemption of what is supposed to mature in May 2026, thereby reducing the amounts that will be needed to buy back or redeem, mature those papers that will be maturing in May 2026. And this is the target paper Fxd1 2023-3. The third option in bond debt management is bond calling. And bond calling has to be featured as a term in the bond prospectus in question. And therefore, a bond calling is a term embedded in the prospectus of an existing bond that upon the option of the bond issuer, he may call back an existing bond for an early maturity. Therefore, a bond calling can only happen if it is a pre-existing term or condition on an already issued bond. And the fourth one is bond redemption. The word redemption is from redeem, where redeem means buyback. And this one doesn't occasion early maturities of the papers. This is the normal, the ordinary maturity of that paper as per the prospectus. And therefore, this is the normal maturity of a paper. And the last one is bond rediscounting. And rediscounting, this is an option available to a bondholder if you want to liquidate your paper early through trading. But unfortunately, in the secondary market, you fail to get a possible buyer of your holding in a particular bond. And therefore, in that case, you resort to the central bank as a buyer of last resort, where in the process of rediscounting, you have to email CBK at rediscount@cbk.co.ke, indicating the specific bond that you want to sell back to CBK and give a proof that you are unable to successfully get a buyer in the secondary market. Bond rediscounting at CBK is done at 3% above the existing bond yield or coupon, whichever is higher. And that is what discourages rediscounting in favor of trading in the secondary market. And those are the specific 5 bond debt management options. And in particular, bond switching and bond buyback will be considered for the following 3 reasons by the bond issuer. Number 1 is spreading of maturities, where it is considered that on a future date, there are so many bonds that will be maturing within a very short period of time. Maybe in 2 consecutive months, the volumes that will be maturing in those 2 months may put a strain or a struggle by CBK to raise enough resources to pay back those bonds that will be maturing. In that case, then these 2 options are made available in order to keep on reducing the amounts that will be entirely maturing at that particular time, where some will be targeted through bond switching, where that one is an option given to existing bond holders for that targeted maturities, where they are given an option to transfer what they are holding in one bond to another new bond which has a longer maturity, which effectively is switching from you are holding from one bond to another bond which has a longer maturity, thereby pushing the maturity of what you are holding to a future date. That is what we are calling staggering or spreading of maturities. And the main purpose for that is to reduce the possibility of a delay or a default in payout of a maturing instrument. And remember, on maturity of a paper, the redemption date also comes as the last coupon payment date. And therefore, we'll combine the two. There is a possibility or there is a risk of default or delay in payout of that coupon. And to cure that, we use a bond switch to stagger those maturities. The other reason for bond buybacks and bond switching is to delay payouts of huge sums of maturities, occasioning or curing what we have indicated as a default risk. And that reduces the possibility of those financial risks and thereby maintaining a good name for the bond issuer in the public. And the third reason is maintaining the debt book balance or portfolio at desired levels. Then at this point, we'll look at the specifics of our November 2025 bond buyback auction. And as per this schedule, the bond in question is the Fxd1 2023-03. This is a bond that was issued in 2023 for 3 years, meaning that it's supposed to mature in 2026 May, and that's why its redemption date is on 11th May 2026. And because the buyback is happening in this month, November 2025, therefore that gives a remaining tenure of 0.6 years. The amount that is targeted for these buyback, the government is targeting to buy back or give a early redemption of 30 billion worth of the existing holdings in Fxd1 2023-3. The total holding or the total maturity for this bond shall be 76.537 billion, and therefore after this buyback, an amount of 46.537 billion will remain existing in the books, assuming that the total 30 billion that is targeted through this buyback auction shall be achieved. And the important date relating to this buyback auction, the bidding period or the selling period is from 23rd October 2025 to 17th November 2025. Normally, a bond buyback auction gives us a longer bidding period compared to a normal auction. The deadline for bidding for this buyback auction will be on 17th November 2025, and the same day the auction shall take place, that is 17th of November 2025, and 2 days after that, on 19th November 2025, that is when the amounts for successful bids shall be wired to your respective accounts. The normal limits or minimum amounts do apply. Non-competitive bids will have a minimum of 50,000 Kenya shillings and a maximum of 50 million, while competitive bids will require a minimum of 2 million as usual. The specific terms relating to these auction is that it is only applicable to unencumbered holdings. If you have used your bond holding as a security for a loan or a pledge, for you to successfully bid and get a redemption on this particular buyback, then you must make sure that such a pledge or that encumbrance is removed some 5 days before the settlement date of 19th November 2027. And that effectively means that you have to do that before 14th November 2025, which is some 3 days before the auction. Once the auction is done and your holding that you had bidded for is still encumbered, then that one will not be considered for the redemption or for the buyback. The auction is on a voluntary basis. It is voluntary. You are only selling back to CBK on an optional basis. You can bid for any amount or a part of what you are holding or the entire amount. And lastly, being optional, you are selling a part or the entire face value of your holding. Thank you for watching and see you in our next video.